Hi, everyone. Thank you for joining us today. As you're coming in the webinar room, we're excited to have you here, and I would love to introduce myself. My name is Marche. I'm the webinar director here at Advice Chaser. Before we introduce our guest and get started, I do need to do a little bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars, such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting, are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. Well, we are thrilled to bring you today's educational presentation. Just a few housekeeping notes as well. Attendees are muted, but we do encourage you to ask questions using the chat box. And when you ask a question in the chat box, go ahead and leave your phone number and email address as well. If we can't get to your question during our session today, we'll make sure someone reaches out to you after this event to make sure that question gets answered. We want this experience to be as educational as possible, so please don't hesitate to ask for clarification or expansion of the material. Well, let me go ahead and pop up this slide about our presenter today. Here we go. Well, I'd love to introduce you to our presenter today. Stephen Abernathy is the founder and chairman of the Abernathy Group 2 Family Office. Prior to this role, he was recruited by Shearson American Express, became senior vice president of portfolio management there, later joined Cohen & Company, a research and trading boutique specializing in healthcare and technology. And while at Cohen, developed the Abernathy Group, which is a group of investment professionals specializing in asset management for experts in healthcare and technology. This collaboration between investment professional and client expert was called the collaborative investing style of portfolio management. The collaborative effort forged between Mr. Abernathy's financial knowledge and the technology and healthcare expertise of his clients has produced top-tier results. Mr. Abernathy later co-founded the Abernathy Technology Research Institute. He is a member of the CFA Institute and the New York Society of Security Analysts. The Abernathy Group 2 and its predecessors have been ranked #1 16 times by Nelson's World's Best Money Managers since 1991. And Stephen, we are so excited to have you here today to present on this topic about challenges that private business owners and wealthy families face. And I'm going to go ahead and turn the time over to you. Give us an idea of what we're going to learn today.
Thanks, Marche. Thanks for having basically an interest in solving some of the unique challenges private business owners and medical doctors face in today's environment. We're here to discuss one of the best kept secrets in the financial community, I think. It's called the family office, and it may well help solve some of the challenges we discussed today. So here's the challenge. Most business owners and medical doctors have never heard of a family office, or if they may have heard of a family office, they've heard of the Rockefeller family office or the Michael Dell family office or Bill Gates or Jeff Bezos family offices. However, attendant to that, most people assume unless I have that kind of wealth, the costs associated with managing a family office would be unavailable to them. Mm-hmm. But fortunately, over the last 25 years, especially, technology has reduced the costs of a family office. And today, the family office structure, which is actually available to more people than you think. because it's affordable. Um, the sort of the summary or the bottom line of this is the family office structure provides families with a personal team of legal, accounting, financial, and recently medical experts, which are available only when needed. And that's one of the keys to keeping costs down. So this on-demand structure may save families more than 150 hours per year, and it likely costs less than a brokerage firm relationship with, again, oftentimes better results. So that's what I'm hoping that we'll discuss thoroughly today, Marche.
Well, it's good to know what we're getting into today. Can you tell me a little bit about how you got your start and how your family office was developed?
Sure. So I started inauspiciously. I was a pre-med major in college that never made it to medical school. I worked my way through college on an athletic scholarship and in New York. And in 1983, I went to work for one of the largest firms on Wall Street because I was pretty good in math. I worked my way up as, from an analyst to a strategist and a portfolio manager, and I eventually became a partner and the director of executive services at one of the most widely respected financial research firms in the world. So that's where I became incredibly involved in research, and we were focusing on value-based principles in technology and healthcare. And while there, we started running hedged assets to control risk. So in 1995, after becoming a partner there, I had resigned because I had an ethical dilemma. I believed that, probably wrongly, that brokerage firms should be eating their own cooking and not saying one thing and doing another with their personal capital. So I built my own research firm after recognizing some of the inherent conflicts in the brokerage industry, and we continued to run our hedged funds. And as you mentioned earlier, we did well. We were ranked number one in the country 16 times over 25 years. And in 2016, we, along with a lot of other hedge fund managers, we just closed our fund to new investors because of the new regulations were a little bit onerous. So,
Okay.
sorry, go ahead, Marche.
Oh, no, that's go. I'm just following along with you. Keep going.
Okay, well, what I was going to say is during that time, which is sort of the way this evolved, unfortunately, running the research firm and the hedge funds was taking all of my time, and I had little time to spend ensuring my assets were legally asset protected, that we were paying the lowest legal levels of taxes available, staying on the legal side of everything. And I had little time to spend with my family, which was the real problem. So, I realized I really did need help. At the time, I was managing the assets of over 30 of the brightest medical doctors in the United States, involved in collaborative investing. And almost all of them were in the same boat. They didn't have time to run a practice, publish research papers, and conduct clinical trials, and they had no time for their families or for their personal finances. And few, if any, I realized as conversations continued to evolve, few had their assets legally protected. This, and we had experienced this, leaving two of our docs open to legal assaults, and several were already being sued by clever attorneys using tactics to circumvent medical malpractice insurance. So the summary was they were swamped just like me. And in 1997, one of the senior employees at our firm created a list of top-notch legal and accounting experts to help me and my firm, my family, manage our assets intelligently. And we copied the structure from the Rockefeller family office model, and we started using my family's assets as a test. And fast forward to today, I've been using the family office structure for over 25 years. We know this business from the ground floor up, and we're here today and delighted to give you an insider's perspective on the family office structure, because I really believe it may help some business owners save hundreds of hours per year and will likely deliver better results.
All right, well, let's go ahead and get into this here. So you mentioned a little bit about protecting your finances, your assets from legal challenges. How are families at risk from litigation?
You know, it's a really good question, and I will tell you that it seldomly, if ever, comes up initially during our beginning conversations. However, once legally protecting your assets is discussed, it moves right to the top priority of almost every family instantly. The reason is because business owners and/or medical doctors can be sued for an almost infinite number of reasons. The first step for every family is to establish a legal structure which will legally protect your assets. Let's just use a simple example, say a trust. The creation of a trust or an irrevocable trust will legally remove, thus protect the assets from your estate. And it's a simple task. You're going to need a competent attorney to create and establish the trust. And I will tell you, for those in high tax states like my state, New York, there's an additional bonus. Business owners in high tax states can domicile their trust in a tax-free state. This will allow the trust's assets to avoid state taxation. So one simple structural change in many families can both legally protect your assets from anyone that you don't want to have access to them, and it may save you thousands upon thousands of dollars per year in taxes. Just a 30-second example. We recently had a family that was domiciled in New York, and again, this was a high tax state, but it's the same thing for Chicago or California or many of the high tax states. We found an expert attorney, created an irrevocable trust for them. It took less than 30 days, and we domiciled the trust in Nevada, because Nevada, along with South Dakota and several other states, their state taxes are 0%, and now their assets are legally protected, and they're saving well over 10% per year in state and local taxes. So it was really a win-win, and they're incredibly pleased.
Well, can you talk to me a little bit about the sort of protections that families should have? You mentioned a trust, but I'm assuming there's other measures as well.
Yeah. Every family is different, and some may already have corporate structures already in place. So it's hard to offer a blanket piece of advice. But most, if you don't have a corporate structure in place, or if you don't have a trust, most families should establish some type of legal asset protection structure, which protects your family's assets from lawsuits, from family squabbles. And by the way, that happens a lot more often than you think. And it also offers inheritance protection, which is a real bonus for lots of families that haven't started to think about that yet.
So we talked a little bit about legal protections. What if you're involved in a lawsuit already?
Oh, yeah, that's a great question. Thanks, Margot. Yeah, it is illegal to transfer assets in any shape or form, which may be viewed as being a protective measure once a lawsuit is established, or even sometimes with clever lawyers up to a year before that. So it's called fraudulent conveyance, and you have to be on guard with that, with that topic. It's a great question because it really does increase the incentive to make sure your asset protection structures are in place well before any other aspect of challenge to those assets is brought up.
Mhm.
In many cases, time is of the essence, and it's just really helpful.
And so I am assuming that's one of the other reasons why it's number one on the list.
It is. It's
Yeah.
for real. Yes.
All right. Well, let's talk about our next topic here. Let's talk about personal tax reductions. Why is that so important?
Tax reduction emphasis is incredibly important because, as you know, taxes take place each and every year. You know, the tax reduction strategies occupy a position between the professional investor and your business accountants. And this is where things tend to slip between the cracks from time to time. Most business structures are flow-through they're flow-through structures or strategies, and they have, so the accounting firm or the accounting firms have to look at both the business and the personal returns before determining which course to take and which framework to implement. For example, your business may have a huge capital gain on a property sale, and this gain may flow through to your personal income tax rate. And it often creates unplanned additional taxes on tax returns when you least expect it. And that's a problem more often than people believe. So many of the business owners that we have worked with over the years try to oversee this process themselves. And it's more complicated than they think. While I do admit it's possible to do, it's time consuming, and a creative accountant will likely save you thousands upon thousands of dollars per year and 10 to 40 hours of your personal time each and every year, of course, depending upon the complexity of your return. So it really is a necessary, I would say, framework to have in place with an experienced professional.
All right. Tell me one of the strategies that might be used to reduce tax liabilities.
Well, as I said earlier, I want to stay away from offering blanket advice on anything because each family and each business is incredibly different and structured differently. So I can't comment on any specific instance, but most intelligent business owners use a combination of legal asset protection and matching losses with gains yearly. And you can bounce back and forth between the corporate structure and the legal asset protection structure that surrounds your family's assets. The use of an LLC or sole proprietorship often offers some legal asset protection on corporate assets, yet income and losses realized by your business may flow through to your personal tax return. So the short answer to that is the intelligent business owner needs to be careful, and the integration of a resource accountant, I think, is key. If you have one already, it's great. And if you don't, reach out and have someone who speaks their language find one for you.
All right. So another area, it's financial asset allocation and asset class diversification. Can you talk to me a little bit about this topic and how important that is?
Yes. We have a saying around here that we live by, and it's pretty simple, easy to remember, and it goes as follows. The more you know about the future, the less you need to diversify, and the less you know about the future, the more you should diversify. For example, and this is potentially illegal, but if you knew that tomorrow company A was going to be taken over by company B for double the price,
Uh-huh.
you shouldn't diversify. You should have everything that you own in that one idea because it is a certainty. However, the legal complications that will come from that insider information may very well end your freedom outside of the jail. So it's a bad example, but it proves a point. The less you know, and the future is uncertain. I mean, we're in the middle of an uncertain time, and I don't want to belabor this, but there's so many questions that we don't know. It does require intelligent global diversification. For instance, are we in a recession or not? If we're in a recession, are corporate earnings going to decline by their average of 30% return, 30% decline over time, or more or less? Will the rest of the world enter a recession with the United States? There's stress on Europe. Brexit took place in 2020. And is the rest of the world going to follow with less globalization? There's a war in Ukraine. Could it become a nuclear problem? It's quite clear that China is planning to retake Taiwan. Will the U.S. will the U.S. defend Taiwan, or what will the world do? These questions, and obviously many more, are truly unknowns. So global diversification is pretty doggone important. And I want to remind everyone that the U.S. is about 25% of the global gross domestic product, which is, the global trade. 75% of the world's commerce is done outside the United States. And we find that the vast majority of families are not diversified appropriately and globally. So it's a challenge.
Can you talk to me a little bit about rebalancing a portfolio and evaluating that? Talk to me a little bit about that work.
Yeah, that's a great question that involves the accounting, the accounting world of your corporate accountant and your personal accountant. So clearly the math supports rhythmic rebalancing. Yet the balance between tax consequences and the mathematics of working, the mathematics of rebalancing in your favor are incredibly important, because each time you rebalance, you're selling assets that have appreciated, and you're buying assets that have depreciated. So keep in mind that the tax consequences will often dictate the rhythmic sessions of rebalancing.
All right. So it's not just about this stock or this, equity is high, so I need, and this is low. So it has a lot to do with how that interacts with the tax implications.
For real. Yes. 100%.
All right. Well, you mentioned that having access to medical professionals is part of your family office structure, and that is something maybe relatively new in the family office. Can you talk a little more about that?
Yes. So during the 1800s, when the Rockefellers established their first family office, and over the ensuing 150 years plus, that family offices have been transitioning and evolving. It wasn't part of a family office structure. My family has had several medical emergencies, and I found that, and in talking with other families that have gone through similar incidents, when a medical emergency strikes, oftentimes the decision makers in the family are kind of frozen. They're really not sure about what to do. So the bottom line is, when a medical emergency occurs, do you want your family member to be seen by the local primary care physician? And the answer for most is no. And oftentimes the primary care physician that's local is going to refer you to the local hospital. That's just sort of the common framework now. Excuse me. In statistics, this medical event is called a tail event. It means the event, it happens quite infrequently, yet when it happens, it's urgent. And most families will say they want access to the best medical care and they want it fast. So our family office, years ago, integrated medical referrals into our practice. And I'm not bringing this up because my family office does it. I'm bringing it up because I believe most of the family offices, they're going to follow. And so it's comforting to know that families, that the family offices will offer this in the future in concert with legal and tax and financial advisory.
All right, let's go ahead and move on. This is one of the key points that you talked about, balancing life and work. I know that you've experienced that yourself. Tell me a little bit about dealing with the demands of work and trying to get family time in as well.
I will tell you, it is the old man's curse, and it's hard to convince a young 20 or 30 or even a 40 something that family time is incredibly important, because they're out conquering the world. And I know that I didn't have time to listen to anybody when I was out being competitive. And I will tell you, when you're in that mode, it's hard to get family time in a busy work life. You're running your business, even when you're not running it, you're thinking about it, and you need to have that time to clearly think about the world and spend time with your family, because they need you, I think. So I guess what I was describing is that it's easy to get caught up in the day-to-day competitive nature and forget about what's important, and it is family. So this is one aspect that I, as I mentioned to you earlier, is probably the most often cited aspect of successful people, meaning they admit that I didn't spend enough time with my wonderful family when I was building this business. And often when you realize it, it's largely too late. So I think that, again, most young conquerors won't listen to me right now, but I will tell you that it's time. It is one of the more important facets that you'll look back on and you will regret if you don't do it. So please, as they say, when on your last day, you'll never regret missing that time in the office. Spend time with family if you can. That's all I have to say about that one.
All right. Well, let's talk about, we've talked about a ton of the problems, that come with owning a business and having, wealth for your family that you have to manage. Let's talk about some solutions here.
Okay. All right. So this is part about the concept of a family office. It has nothing to do with our family office. It's just my experience from doing this and knowing what to do from the inside out. You may be highly skilled and you may be incredibly well educated and an expert in what you do, but the world also often will, I don't know, how would I say this? I guess the world will be taken by the person who understands where their circle of competence ends and where someone else's circle of competence begins. I fancy myself on being a pretty good tennis player, but I can promise you, if I call John McEnroe up and challenge him to a tennis match, it's going to be a really ugly incident. So it's unlikely that you, who are the king of the universe, are an expert in all legal, medical, investment, and tax matters. My advice to you is episodically, when needed, relationships are incredibly important. And it's not to say that you need them, 50 hours a week, 52 weeks a year, but you do need a coordinated team approach. And it's really, really valuable to you. You need their expertise throughout your family's life cycle. You'll need them at times, and times you won't need them. And though you don't need, as I said earlier, any legal expert or accounting expert or financial or medical expert 40 hours a week, 52 weeks a year, as I said earlier, there are going to be times that you will need them. And this is where the family office comes in. The family office that's technologically sort of coordinated comes in, because these people are available on demand. And sort of the medical industry is a great example of this. So medical doctors are incredibly intelligent individuals. They've been the top of the class since the first grade. But even doctors know that they need teams of professionals that depend to present a quality, low risk environment. So they need professionals that are pros in preoperative preparation, prep, and they need to prepare the patient mentally and physically for what's going to happen. They need anesthesiologists, for example, and they need someone that's organizing and controlling the operating room, and postoperative care. I mean, how important is postoperative care, to allow the healing process to take place. So I don't want to bore you with that minutia, but when dealing with important issues, and I would say your family's personal financial matters are important issues, the more professional attention, the better the outcome. Expert advice acts as a hedge or an insurance policy when you need it.
All right. So talk to me about some of the cost savings you get from using a family office.
Yeah. Here. So the family, there's two types of family offices. There's a single family office and there's a multifamily office. So the multifamily office model works directly for families, for the families it serves, which, by the way, I want to make mention to this. It often, and when structured correctly, it makes the family office costs a tax deductible expense. So keep that in mind when you're thinking this thing through. As I mentioned earlier, there are two types of family offices. There's a single family office where one family employs lawyers and accountants and financial experts or analysts, and at times even a medical doctor. And the contrast that with a multifamily office model, it means that the family doesn't need all of those people, as I said earlier, 40 or 50 hours a week, 52 weeks per year. So you need them only episodically. And this means that the cost of a multifamily office is much, much less than a single family office. And that's what's made it available to more people. And unfortunately, they just don't know about it yet. So that's what I'm hoping to alert you to, not for our family office, but for other family offices. And over the years, the family office has saved me literally hundreds, and I'm not exaggerating, hundreds of hours per year, and saved me hundreds of thousands of dollars in mistakes I would have made otherwise. I am, I'm just telling you that, and it wasn't anything that is unique to my family office. It's just the structure. It gives you a hedge. It makes you look over your shoulder, and you've got experts helping you when you need it. So, the questions I would ask you to think about would be, how important is having your family's assets legally protected from everyone you don't want to have access to those assets? So how important is that to you? And if it's not very important, all is well. You don't need it. What is it worth to have experts take care of the work you don't enjoy doing? The bookkeeping or the bill paying, or, my goodness, the taxes at the end of the year. Holy cow. I can tell you from experience, the outcomes are likely to be much better using experts than doing it yourself. And the hours, the literally tens to the hundreds of hours per year, you don't have to spend doing that drudgery, I think. Gives you time to spend with your spouse or your partner. It then gives you time to spend with your children if they're still around, and or your grandchildren if they aren't. And it gives you some time to have some interests outside of work, because at some point in life you're not going to work 50 or 60 or 70 hours a week. So the answers, Marche, they're different for every family, but the value, I think, is unarguable.
So it sounds a lot like what good business owners do. They delegate the tasks to the experts in their own company. You talk a little more about delegating outside of obviously a company structure to handle your family's finances and other matters.
Yes, and again, this is it's a subtle question, and it's a really good one, because most people don't have the ability to look around a corner and see this happening until it's too late. So I've been doing it, long enough to witness firsthand some of the mistakes that have gone on in businesses outside of my personal business. And here's what happens often. Not often, but I would say more often than you think. Business owners and medical doctors often delegate personal matters or personal financial matters to their trusted employees and their partners at work. And sharing your personal financial matters with the same people that handle your business matters, it's not always intelligent. And the reason for that is not that anybody's going to steal from you, but it's often that lack of privacy that creates jealousy internally. If something happens and you make a super significant amount of money, your employees will all know about it. They're not quite as leak-proof as you might think, and at times this breeds jealousy, and so every business is different. Every business structure is different, and every group of people that work in the business are different. But I've seen this happen time and time again, that it may very well behoove you to have someone who's not associated with your business take care of your personal financial matters. As a matter of fact, I would say that it's a primary consideration. Doesn't mean that you need to do it, but it's a primary consideration. I've seen business owners who actually demand that someone from a different city take over their personal financial affairs because they don't want it known inside their city, because they're afraid that people will share information, employees will share information with people that are local, and that will breed ill feelings at times. So it's a consideration.
Can you talk to me a little bit about the process on how to select the right family office?
Yes, and what I wanted to do at this point, Marche, was just make sure that I underline and support your effort. the Advice Chaser, it does a great job of making information educational. And I want to make sure that you know that this is not about my family office. This is just about the family office structure in general. You might not know it, but there are over 6,000 registered family offices in the United States. When you search for a family office, make sure the following is in place. Make sure that the employees of the family office that will become part of your family office are legal fiduciaries, first and foremost. You don't want conflicts of interest entering the decision process at any point. Make sure they have years or hopefully decades of experience doing what they're doing. As I mentioned, make sure there's no conflicts of interest. Make sure that you enjoy their company. A family office sort of quarterback, someone who is sort of overseeing your family office, they often become a distant or sometimes a quite close family member. So it is incredibly important to make sure you enjoy their company. No one wants to work with someone as much and as often as you work with someone in the family office that they don't enjoy.
Yeah.
And lastly, I want to make sure that, and I know it goes unsaid, but trust is an incredibly important factor. So make sure that you have several referrals regarding the family office. And by the way, these referrals should be not only from current members of the family office, but you might want to get a referral or two from people who've left the family office, because those are often most helpful.
Very interesting. Well, we have some time to answer some questions here, and I have gathered some as we've been going along. So I'm going to go ahead and open the floor up to those questions. Again, as we're going through this, if you have more questions, go ahead and put those in the chat. This is a great question that came in. What sort of oversight should you, as a business owner or an employer, a client of a family office structure, what sort of oversight should you have over what the family office is doing?
I would say complete oversight. And I'm not trying to make you become an expert in what's going on, but the standard structure is to have a quarterback, and the quarterback oversees the legal challenges and the accounting, a lot of the accounting work, and often the financial diversification of assets, and often even the medical search. So you need to be able to talk to that person with complete honesty, and that person, that quarterback entity, needs to be you need to know that they're on top of things, and these quarterbacks are on top of things. You know, that's their job, and they're really good at this kind of stuff. So in most family offices. So again, make sure that you enjoy their company and make sure that they're trustworthy, and you can do that easily by gaining referrals and talking to the referrals at depth. Does that sort of answer the question, Marcia?
Yeah, it does. Let's go ahead and move on to the next one. This is a very good question. How long does it take to set up a relationship with a family office? And then, as far as once you've got a relationship with your family office, what's kind of the time frame that people should expect to spend every year working with that family office?
We have a process that takes for the complete process to envelop the family's asset structure. It takes a little bit less than a year, and there's a 12-step process that we go through to do that, so that nobody's rushed, and that the family decision makers aren't tasked with making a lot of decisions right out of the box. So the bottom line is it's going to take a little while. The more time, the better. I know that doesn't sound like it's logical, but the more time it takes, or well, everyone's reasonable, but the family office they'll become part of your family asset structure pretty quickly. They'll understand. I mean, they do this stuff for a living, and so they'll be helpful. Marcia, can you remind me what the second part of that question was, real quickly,
Yeah,
because I thought
so
it was important.
yeah, once you have an established relationship, what does it look like as far as a time commitment from year to year? And of
Yes.
course, you know, it's going to be different, I'm assuming, if you have a medical emergency or a big project that you're working on, but I'm just talking about kind of maintenance.
Yes. Yeah, that's where the family office structure comes in. That's why you put a little bit of upfront work into it the first large portion of the year, and then it gives you an incredible amount of leverage in the years to come, because they work with the attorneys when something needs to be structured differently. They work with the accountants when there's an aggregation of financial asset, capital gains and income, and business capital gains and income. And it's incredibly important when an episodic event, or what we call that tail event, takes place medically in your family, to have someone who can allow you as the family decision maker to take care of your family and to calm everybody down while you're out finding, if it's neurological, that, someone at Johns Hopkins, or whether it's cancer, somebody at Memorial Sloan Kettering, so, or the Mayo Clinic, so it is the long run that is greatly advantaged by the work of a family office.
All right. So this is just a comment here. Maybe you can speak to this. Just an experience. It said, finding the professionals and vetting them is one of the hardest tasks I have, finding the right lawyers and the right accountants and things. Does the family office take care of that for you?
Yes, every family office will help you find the right legal counsel, the right accounting counsel, and the right, usually they don't spend much time on the medical needs unless it's demanded. And most of the time, a financial professional is among those who are the quarterbacks. So in general, if you have an attorney that you've been working with for years and they're excellent, you should probably keep them. There's nothing that says that you need to have a whole new structure surrounding your personal life. If you've been using them with the business and they're excellent, keep them. But I will tell you that, at least from our standpoint, we find out whether you want somebody that's local, or whether you don't want somebody that's local, or whether you want somebody that's just a national expert, whether it's an attorney, or whether it's an accountant, or whether it's a financial professional. And once we know that, we go out and find 3 or 4 that are qualified, because we know how to ask the right questions, and then we help you interview them, and you make the decisions as to who is the best fit. And there's some dialogue that takes place between the business decision, or the family's decision maker, and the financial or family office professional.
All right, and then we have time for one more question. I want to first of all thank everyone for your questions, and go ahead and leave. If you have more questions we haven't been able to address, you can leave them in the chat and we will save those and reach out to you if we haven't been able to do that. So can you talk a little bit about what are the biggest gaps that you see that families haven't covered? And maybe they're really good, they've got their accountant, they've got their attorneys, but are there common gaps that you see that people have forgotten to cover when they come in to a family office structure like yours?
The most common oversight is not planning for, how would I say, I guess, an estate plan.
Mm,
So the most common sort of mistake is, and it's not about thinking, focusing on the fact that you're going to die one day. It's sort of about starting to get a handle on the way you want your family's assets structured and owned between now and the time that you pass away, and where you want those assets to go. Quite often, we find that people don't use tax deductible sort of donations to charities effectively enough. I mean, some of these things can be, you don't necessarily need to wait until you're 91 years old to start giving away your assets. Why not give them away a little bit earlier in life? Again, I'm not trying to make anybody poor. I'm just trying to say, why not give them away a little bit earlier in life and help the charity and help your family's representation in the community grow. There's also something that we call strategic philanthropy that often is really helpful to families, because by giving and supporting any number of local charities, it's often helpful to your children that are bright and that are, they're out of school, and oftentimes you will start out as being one of the board members, and you start to incorporate your children into the board atmosphere. They learn a ton, and at times you can start walking your way out, and your children will take over. It's just helpful to families, and there's lots of things that are similar that a family office will be creative and will help you with.
well,
So
that's
thanks. Those are really good questions,
really
Marcia.
good questions. And I will say that even though we don't have time for any more questions, again, if you have any more, go ahead and leave those in the chat. We're happy to reach out to you after the event to make sure those get addressed. And it's a really positive note to end on about leaving a legacy and, and doing good in the world. And it's exciting and to hear how family offices can help you do that. So thank you so much. I want to thank everyone who's been here and remind you that if you missed a portion of this, we're going to be sending out an email with a link to the replay of this event, and you're welcome to share that with your friends or family or colleagues. Here at Advice Chaser, we're all about helping you find a financial advisor who's a great fit for your life and your financial questions. Our matching service is free to you, and every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. Again, Stephen, thank you so much for being here, for being our speaker. Really appreciate what you had to bring to us today. And again, Advice Chaser is here to help you find an advisor. You just have to go to advicechaser.com and click on the link to find an advisor. Once again, from Advice Chaser, thank you so much for coming, and we will see you at another webinar soon. Goodbye, everyone.